Good afternoon. This is Ken Long at Tortoise Capital with a review of the weekend trading reports for August 10th, 2018. The market is in bullish normal conditions. It's overbought on an annual basis using the NDX 260. On a 10-day basis using 10-day NDX, it's in the middle of neutral at 58 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average is yellow bullish at 4.61%. Slope of the 50 decayed a little bit to red neutral at 0.46. ADX is a very weak non-trending 12.5. The risk index is the 30-period moving average of the VIX divided by the 10. 1.0 is the boundary between risk on and risk off. Current reading is at 1.062, so we are into risk on conditions. Compare that number to the last 5,000 trading days, and we compute the risk Z by finding the average and the standard deviation of that look-back period. And our risk Z is at 0.58. This is a 90-day histogram of that indicator, and you can see that we are into the fall. We've made a high at 1 sigma and then about 3/4 and slowly decaying as volatility is beginning to creep back up into the market and put the gains at risk as we're testing all-time highs. So there was some closing weakness in the last 3 or 4 days last week. These are the current holdings of the blended monthly rebalancing, with the next rebalancing due on or about 1 September. And these are the winners in the different portfolios that you see as of closing prices on Friday. In ETF2, the theoretical exposure of the model is at 40%, with 4 out of the 10 major indexes above their 4-month moving average. Just a quick look at the BMR portfolios here. You can see that it's all U.S. all the time, about evenly split between the U.S. and the globals. Tech and small caps in charge right now. Latin America took a big hit this week. ETF 32 portfolio, again, about evenly split between the U.S. and the globals. Brazil and Latin America both took the hits, as you can see. China had a little bit of a rebound off of some really negative performance, but otherwise the main U.S. indexes were just kind of grinding sideways mostly. Treasuries had a little bump. In the Dow 30, about 2/3 are on buy signals. We had some strength here in Nike, Microsoft, United Health, American Express. Some crushing performance here in 3M, Goldman, Caterpillar, and GE. So I'll be looking for more collapsing in those if we get weakness in the indexes. Otherwise, I'll be expecting the leaders to continue to lead. In the sector spiders, still dominated by the by buy signals, with most of the business sectors above their 4-month moving average. The leaders continued to lead: pharmaceuticals, retail, innovative technologies. Treasuries again had their little bump. In ETF Max, pharmaceuticals, consumer discretionary, some retail, some small cap growth looking reasonable as momentum follow through plays. In the market health check, so we've got the river sloping up, the RL270 is sloping up, the Bollinger Band mean is sloping up, the PSAR is below the price and helping to push it up, so we're 4 days into this little trend. The slope of the 10 is from blue dot to blue dot. 30 is from black dot to black dot. So again, all that is favorable, and the 10 is stronger than the 30, so that's range expansion to the upside. In the regional report, we've got technology and the Russell are leading the way. The U.S. is all favorable compared to the rest of the world. Again, 4 of the 10 are on buy signals, 6 of the 10 are on cash, and so the theoretical model is 40-60. 2 weakest sectors, Latin America and emerging markets. Inside the U.S., it's discretionary, healthcare, and technology leading the way. In the world market model, any small cap, mostly U.S. growth, all looking good. Canada and Mexico doing pretty well. Brazil got smacked, however. Leaders pretty much continue to lead this week. The only new addition of green and white is the healthcare sector. So XLV is looking strong. Again, that's reversing about a 2-year lagging performance in healthcare. So this may be part of a secular trend up. And again, when I see green and white, just so you can see this a little easier, green and white, that was something that was above average on the 10-week and is now great. It's now green on strength. And so the idea there is that we're going to exploit this new and emerging strength. It's eligible for turbo trading, meaning that we also want to play that intraday if possible. And this is the way we identify new leaders are in the green and white. So healthcare is definitely in that category. Shifting to the daily. You can see the 10-day max pain candidates, no signals and channeling an overreaction. Many dojis on Friday and some good channeling signals among the Dow. Plenty to choose from on the auto framer, and the RSI2 value in single digits, as we learned from the research weekend here in Kansas City, is a very favorable signal. So those are going to be ones that I'm looking to frame for short-term positive moves. That'd be like Boeing, General Electric, 3M. Those are all nice candidates because not only did they have like a 2-day washout on their RSI2, but they also auto-frame very well on a return to a 10-day high. So that becomes a really nice candidate for exploiting. It's not unusual to see that with oversold conditions here in the price changes. So it sort of takes that kind of move to set them up for success. Lots of goodies in the ETF 30. So the pullbacks here recently have been very favorable, and some good frog quality numbers to help us with the hybrid frog for intraday. And again, how many are testing out well on the auto framer and on the 551Ws. That means they had positive 1-day performances and yet test out well on the auto framer and have RSI2 values. That's very favorable. Daily pinch and stretch. Pfizer continues to dominate, along with Apple, are the most positive Z stretches. That means the furthest excursion on a Z-score basis from their Bollinger Band mean. The largest negative Z stretches here in the red, that any time that it's in the red, meaning it's more than one standard deviation of stretch, means that's been an exceptionally sharp adverse move. That means things like Intel and Boeing are on the short list. The most expanded pinch boxes, these measure how wide the river is on a statistical basis for that symbol. Then it takes an exceptional 30-day directional move to really create the conditions where it's more than one standard deviation of a wide river. You might think it's like been flooded with directional money lately. And so Pfizer and JP Morgan have been extraordinary moves. Let's take a look and see what one of those extraordinary moves could actually look like. All right, so this is Pfizer. Let me shrink this down a little bit for you to see. Yeah, so this is Pfizer. coming out of that sideways quiet channel, and then a pocket, and then this extraordinary move. Now you can see that it's already, I think, had its day in court, and it's coming back now. The RL10 is crossing the baby dragon. You can see we are still in the summertime though, and this is an exceptionally wide river, and like almost a 3 sigma. So that's what one of those moves looks like. This is why we are very interested in the Z3 super pinch. Notice that you have an extraordinarily compressed Z3. You have all 4 of the regression lines tightly in the channel, and so breakouts from that channel right here become very high priority moves for us when there's no resistance above, and then you get some nice entries, and so that's a trade from, that's a 10% move in a couple weeks, and has been very powerful. JP Morgan gives us the same kind of reading. This is a 2.5 sigma width of the river, and that one also came about from a compressed range here. And then I want you to notice the going from winter to spring, and then right here is where it kicks into summer, crossing above the 0 line. The PSAR flip occurs. It's back to the swing highs and resistance, and there's a nice orderly move for us. And now it's starting to fail as it goes from summer, and then 3 days of fall. So there was plenty of warning. That's a really good trade, and with the combination of the PSAR flip, this would be the day to cash that move from 106 to 115 in about 10 days. So nice trade there. Devon Energy is a super pinch. So let's take a look at that one. So Devon Energy has a nice tight pinch here and is collapsing to the downside. So any breakdown below the RL270 would be an auto short. Strength above Friday's close, however, I'd be playing back towards Bollinger Band mean, far side of the river in the floodplain, and then all the way up to the previous swing high in the Z3 line. So that's really a critical state. And I'm ready to play that in either direction. Notice that we are in the winter time, and so that's a nice critical state of Devon. The Russell is pinching. The river is compressed, more than 1 standard deviation tight. It's hovering right at the 0 line after a very mild winter. It's now into the spring, and so this sideways channel of the last 30 days could be expressed to the upside here very nicely. I think that one has some nice potential, and if we look back far enough, yeah, that little piece of stability here is nice. The last time it voted up, and it voted up again. So this is a market that's looking for any sign to go break into new all-time highs. So absent negative political news, that would be the least surprising move. And you'll notice that the PSAR has flipped and is only 4 days into the new trend, and that the Russell, once it starts trending, tends to have nice long trends. So any kind of upside strength here would, I think, be a low-risk idea. Plenty to choose from in the auto framer and the regression line fractal. Lots of good choices here. The top shelf, these are the deep value plays, ones that are the most number of ATRs below their own RL270. So let's just take a look at Boeing. That's appeared a couple times. So we can look at that on a swing trade basis. So I actually like this location in Boeing from a trade location because you've got strong support here at 321, 330. It has pulled back to what has been previous support levels. It's in the fall. It's still above the 0 line, and so if it can find support here, then it has plenty of upside still to the RL270. The other thing I like is that you're going to have a very tightly defined risk, and if it breaks below 332, then that's a sign that these last 2 upward moves are over, and then you would have a high, a lower high, and then a collapsing dragon. So I'm ready to play this one intraday in the direction of price, and then with clear areas where I can add some swing positions. And then were it to collapse below this swing low at 320, then it's Katie bar the door down here to 300, and then we would be deeply into the winter once more. So Boeing is in definitely a critical state, and this is one that we would want to pay particular attention to. So if we zoomed in on that a little bit, yeah, any weakness below 335, I think, is an auto short, and then if it breaks below the belly of the dragon, the belly of the baby dragon, all those are reinforcement points. That would be a high price short for me, especially if I saw a weakness in the U.S. indexes. Lots of squeezes to choose from based on the lack of volatility on Friday, so you get a lot of good quality names to choose from for one-day pops. And this is a new chart I'm looking at. This just takes the Dow 30 and expresses where they are in terms of the 4 seasons of MACD histogram. You can see on your sheets if you zoom in. You can see where MACD histogram is in the. This is the sample. So GE, Intel, and McDonald's are all in the spring, and that means that they're below the zero line, but the signal line is rising. Summer is it's above that zero line and gaining. These here, Merck, Apple, Pfizer, and Cisco, in my view, when you look at the MACD Z-score, they have already really extended themselves into powerful moves. So in a perfect world, what you get is you would catch Pfizer as an example, which we've already seen, when it was in the spring and got it early and then incremented into the position and then able to fully harvest it when it makes that nice move. Notice how much of the Dow was in the fall. And that means they've all been experiencing weakness and our price is starting to roll over, and that's the time to ensure that you've got your profits captured and stops in place. And then the winter with ExxonMobil and Home Depot, that's really ones that you're looking for that they're fully collapsed, and you're either looking to get short those on additional weakness or looking for that turning point into the spring. And so that cycling would normally go like this, the spring through the summer to the fall and the winter. And I've got this sorted by spring, then the summer, because those are the ones that I'm interested in the positive gains here. The S&P price cracked a little bit there on Friday. The slope is still up, but we've made a crossover of the RL30 over its 10-period moving average, more than one standard deviation above the long-term average, and that has quite often signaled a turning point on the intermediate move. So I'm very mindful of this being an early warning shot, and this is the place where the last 2 times there followed some temporary short-term weaknesses. So this is a place to ensure that you've locked in your gains. You can see volatility just starting to creep back in after a period of quietude. The 30 has rolled over. The 90 has made a very nice run during this whole period of gains. But the 10 is at the top of the river and starting to roll over. The 30 has rolled over. The 90 is fully expressed. So I view that as sort of the leg 1, pause, leg 2, pause, and now we're at the top of the river. Now we're going to see if we can make a real run at the all-time high or if this is a pullback. If it's a pullback, coming back to 275, even 270 to the bottom of the river is not unusual. You would see the last time it was there, it collapsed, it held, it collapsed, it collapsed. So it's a coin toss, and we'll see what we see. And that's everything I want to cover for this week. This This is a swing trading market as well as a day trading market because we are at a critical state for the swing trades in the U.S. indexes. The U.S. has been leading the way. The rest of the world's been has been very weak. I don't see sector rotation happening. In fact, the leaders in the sector rotation from the globals have been Latin America and Brazil, but you just saw that they cracked this week, and I don't really see any new leadership emerging yet. So if the U.S. is weak, this could lead to a general pullback altogether. So I'm concerned about that. So we talked about that weakness in Brazil. This is where it's had that nice counter trend rally back to the long-term fair value, but then the last 4 days has just rolled over and collapsed with an RLXD. Latin America itself is the same. So if they're still weak and the U.S. is cooling off, that's this could be a bit of a sea change here inside the U.S. So let's keep our risk measured and our powder dry. Be ready to seize shorter-term opportunities in both directions.